Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some, or hopefully a lot of money on the internet. Load up discussion today. We have price going up. First thing, markets are green, so delighted to say that. But we'll be talking about BlackRock Bitcoin ETF driving more revenue than its ETF fund. We'll reflect on that. We've got Solana. Oh, we don't have Solana trading app. We've got. That was yesterday's news. We've got, I'm not sure what we've got. What have we got? Let me find the snapshot.
We got Hyperliquid and Sui being up quite a lot on the
you.
day. Sui actually outperforming Hyperliquid, which is weird to say.
That is weird to say. I'm just checking through the document, which I have not updated, but we've got OpenAI issuing statement clarifying Robinhood's OpenAI tokens do not represent equity in company. We were talking about the equity yesterday, which was, how it caused a little bit of a controversy, I think. And we've got Peter Thiel and Palmer Luckey to launch a crypto bank. So big institutional news as usual. We've also got the latest on price action on crypto and NFTs. And today, delighted to say, we have Wardaddy back on stage with us, back in the game by popular request. First time went so well. Wardaddy, we had to have you back, man. How are things?
What's up, guys? How are you guys? Good to be here. Good to chat with you guys. I'm getting to catch up. It's early my time, so this is fun to catch up with you guys.
It's going to be good, man. Looking forward to bringing you into all the usual conversations, and as usual, probably get a bit of a Hyperliquid angle as well. So we'll get there in just a second.
Cool.
But before we get into all of that, guys, just a reminder: nothing that we say here is financial advice. The market's very, very risky. We don't know anything for sure, so please proceed with caution and exercise your own judgment. With that out of the way, Legendary, how are things your side? Obviously, apologies at the top of the show, having some technical issues. If you're watching in, this is kind of my usual location, but not my usual setup. Everything's a bit of a mess here today, having some technical issues, but we carry on as normal. Led, how are things your side? What's going on?
Jim, I am not surprised that you have the AirPods Max in the same colorway as I do. It was peak ridiculousness in Dubai. We spoke about it yesterday at the when we were at the conference a couple months ago. That we were in the same hotel in different rooms, and we would step out in the morning and we'd be dressed exactly the same way. And it was like so specific because like one day was a black t-shirt with like short tan pants. And the other day we like both had blue collar shirt on. And it was like so weird to be in sync with that. So I'm not surprised to see you rocking the same AirPods Max as I also have at home as well.
Yeah, we have weird similarities that kind of trail across our lives in various ways, like various history as well, which is like it's got some weird interconnected arc of history in some way.
But apart from that, I was on the driving range this morning without my coach. I was like practicing on my own, and something clicked. And actually now balls are moving in the air, flying 50 yards, flying 100 yards. There's very satisfying sounds when you hit the ball and you see the ball not like rolling, but actually lifting off and flying in the air. And that was a very good sesh. So I'm getting ready to starting to feel not completely uncomfortable to send you a video of my swing.
Don't just send me it. We want to see it. The public want to see it.
I was going to say, I need to see this.
This is the thing, Wardaddy. What do you think of this? He's refusing to show his swing.
It's probably because it's embarrassing. So I don't blame him.
That's the fun. The fun of it. I want to see it be embarrassing, and then you get to see the side by side. This is the positive thing, the positive spin on it. You put it out now, and then in 6 months' time, you get to do the side by side.
I
That's
agree
what
with
we
that.
want to see it for.
I agree with that.
Let's film it now, keep it private, and I just post the side by side, and I spare myself the embarrassment because engagement is good. I don't need to embarrass myself on the timeline,
Yeah, fair enough. Okay. How are things your side? What's going on with you? How are things checking in?
Good, bro. Good. It's finally starting to come together. I've been moving all over the place. My girlfriend and I are moving in together, which has been pretty exciting. Nice. So that's on the personal life front, but everything crypto wise has been pretty insane. Obviously we got the CoreWriter announcement this week, which is really exciting. We can go into that a little bit more later. So yeah, everything's looking up. Obviously hype over 40 is fun. So everybody's having a good day.
it's more fun than it was dipping down to 30.
Yeah, exactly. So everything's good.
The one thing we're going to have to find the clip, Wardaddy, like there was this time in January or February, I can't even remember what time it was. I just kept saying on the show, better to buy at 13 than buy at 30. Better to buy at 30. Like I have to go back and find it, but there's no good way to search for the clip. So
I was gonna say it's always fun to dunk on people on the timeline. I think right now it's better to buy at 40 than it is better to buy at 200. So I think that we can go back and clip that one. So
that doesn't it doesn't have the same ring to it though. You're gonna have to be like 40. Okay. Okay, but the CoreWriter thing is interesting. We had an interesting conversation with GT from GigaETH yesterday. We're going to host all of these interesting conversations, but I do think the CoreWriter stuff is worth touching on. So just for people listening in, obviously we're going to get to the usual headlines as normal. We've also got our partner Polkadot segment coming up today a little bit later to talk a little bit about hydration. But probably maybe before that, Wardaddy, let's touch on the CoreWriter stuff after we go through the headlines and after we go through the price action. So
awesome.
I think people will definitely want an update on that because there's a few things going on in Hyperliquid that I think people they hear the name but they don't know what's going on under the hood. So as usual, then let's get to the price action to get you up to speed with what is going on. And I have to say it's looking pretty good, guys. It's looking good. Bitcoin is up, and sorry again if I'm like my setup is I'm looking up into the sky. I'm using like multiple screens as things are not working out for me here. But Bitcoin's up a couple of percent to 109K, went past 110 for a second before dipping back down. ETH is up 5%. It is no longer a 2.4K asset like it always was. It's now almost 2.6. You can probably round it up to 2.6. XRP is up 5% to $2.30. Solana is up 3% to $154. Our favorite alternative major cryptocurrencies, number one is Hyperliquid, up 4% back above $40, up almost 9% on the week. And Sui is up 9%, also back to $3. So that's interesting to see. On the meme coin side of things are really ripping here. Doge up 7%, Pepe up 9%, Bonk up 16%, Fartcoin up 14%, back to $1.24. SPX up 8% to $1.30. Pengu's up another 9%. It's actually up 70% on the week, which is probably the biggest mover across the last 7 days. WIF is up 15% today. Wow, so big moves across the board. Useless coin is only up 7% in the last 24 hours, but it is up almost 100% on the week. So I take the thing back about Pengu. Obviously, Useless is moving the most. I think the thing to point out here is a lot of the Bonk guy coins are the ones moving the most. Even Bonk itself was up a lot. Useless was up a lot. And the house, no, I don't want to say house coin because it's not house coin. What's the name? It's the one that's in the snapshot. I put it in the thing earlier. Is it Hosico? Is up 50% as well to 55 mil. So a lot of the Bonk guy coins really moving aggressively up. That's what you need to know on the price action side. In terms of the headlines themselves, let's get those up. As mentioned, we'll be talking about BlackRock Bitcoin ETF driving more revenue than its ETF fund, thinking through the consequences of that. It's pretty huge news if you really get a chance to reflect on it, which is what we will do. OpenAI issue a statement clarifying that Robinhood's OpenAI tokens do not represent equity in the company, nor do they have a partnership or endorse the offering. Maybe a little bit of a hit to the Robinhood offering there. We'll talk about if that is meaningful in any way. And then finally, Peter Thiel and Palmer Luckey to launch the crypto bank Erebor. Just huge moves on the institutional side, looking to fill the gap that the Silicon, what's the name, the SBV bank kind of left when that imploded. So that's interesting to note. Ledge, is there anything we need to know on the NFT side that might be interesting here?
Actually, yes, there is movement and there's stuff going on the NFT side. We have Miladies being up 9% on the day. We have Remilios being up 45% on the day. I was trying to find out what's going on. It looks like a massive floor sweeping that went on. And there was a Forever Culture Fund that posted that they are sweeping them, but I couldn't tell if that's serious or trolling. So I can't, unfortunately, provide any insight into why Remilios are moving up so aggressively. And then we also have patrons. You will like that being up 17% on the day, being at a 2 ETH floor. And that is with the 2.6K. So dollar-wise, they're now moving up as well.
Interesting. That's very good news. Patron value going up, which means all of the Infinex Yap run rewards are obviously related to that patron value, right? Because they're kind of not synthetic Yap, not synthetic patrons, but just like a fractionalized version of the patron value. So that's good to know. Getting into the rest of the news to get you up to speed with what else. I thought there was a lot of interesting stuff today, so I'll try and rattle through this. If you find anything interesting, just stop me and we can talk about it. Ripple applied for a US banking license one day after Circle did the same. That was interesting. Coinbase acquires token management platform Liquify. Just the M&A that's going to happen in crypto, that's like you can feel it happening and it's about to start happening, I think is really going to go on fire. One of the things we've been speaking about on the show is having more exposure to crypto equity. Fine, tokens can go up and down. We like doing that type of side of things, but we're about to make some more bets on crypto equity. And we have been keeping that in mind over the previous 6 months, because in a better regulatory environment, we think that would be something worth having some exposure to.
And it seems that this trend that we started to talk about last week with Kraken and their like neo-banking-esque product seems to continue. As you said, we had Circle with a banking license, we have Ripple with a banking license, we have Peter Thiel as one of the main headlines today coming out with his own crypto native bank as well. So it does seem that this is the next evolution for some of the bigger players, whether it's like centralized exchanges or actual blockchains, to try to break into the banking sector, while at the same time traditional banks are launching stablecoins and big like crypto native institutions are launching retail banks. So like both sides are trying to attack each other's customer base from a different angle.
Yeah, I mean, ultimately, I think this is always the way it's going to go. Like, it's money, it's banking. The merger between crypto and fintech is happening, which is why the worlds are colliding, right? Banking, stocks, stock trading, crypto trading, it's all going to be convoluted into one thing. And I guess you're trying to pick the winner there, which we'll continue to reflect on and have had some thoughts on already. Maybe we'll go back to that conversation when we talk about Robinhood today. In other news, the Solana ETF with staking ended its first day with $33 million in volume and $12 million of inflows. Not bad. Just a quick update on that, though. I'll just tell you what how the other ETFs are doing. I always have that data ready here. Just refresh. Okay, so I mean, the ETFs have been on a heater, to be honest. All of them. Bitcoin had 407 mil in yesterday. 300 out the day before, but before that it had 100 in, 500 in, 220 in, 500 in, 500 in, 350 in. So like real big inflows. Even ETH had an outflow day yesterday, but had 40 in, 30 in, 70 in, 26 out, 60 in, 70 in, 100 in. So like in general, all the ETFs are like, well, Bitcoin and ETH, those are the ETFs available. They've been kind of moving the last week or two, I would say, when I've been keeping an eye on it. So interesting to see Solana kind of enter that conversation. Addentax Group announces entered a term sheet to buy up to 12,000 Bitcoin from an independent Bitcoin holder. Nasdaq listed Bit Digital raised $163 million to fund an ETH treasury strategy. Aptos launches zero-fee stablecoin transfers across 20 African countries. Is interesting. I think stablecoin fee transfers are going to go to zero, right? Ledge, we've been speaking about Plasma, for example, and how that's going to be built into the chain. Like if you're transferring USDT, it's going to be for free. And I think everyone's going to have to think about that. It was interesting for me to see Aptos, I guess, front run it in a way, or just establish that already to let people to move the money for free.
I mean, it has to be this way, right? If we just continue this thought of banking, crypto natives going into banking, you are used to sending money around, at least like within your country or within the EU or within the SWIFT area, typically for free. That's basically the case for most people. So it's not really competitive if then we onboard people to stable coins and then tell them, oh, you have to pay 20 cents, 10 cents, whatever, a buck per transaction. So I think it absolutely has to go this way, that it becomes normalized to send stable coins around for free.
Yeah, these fees are going to compress, I think. Some other interesting news before we get into a bit of a discussion here. Jupiter launches a launchpad. It facilitates developer vesting and creator fee share. Everyone wants a launchpad these days, I guess. Franklin Templeton Digital Assets released the Strategy Treasury Playbook. So definitely being on top of this trend of multiple treasury playbooks kind of coming to market, whether that's for Bitcoin, for ETH, for Sol, for Hype as well, we've seen. So that's interesting to note. A couple other bits. US bankruptcy judge decides bankrupt lender Celsius can pursue Tether in a $4 billion lawsuit for improper liquidation of Bitcoin held as collateral. And finally, blast from the past, perhaps, Blur announced the season 4 airdrop, which maybe many people have forgotten about.
I saw this yesterday.
The announcement was made only on the Discord without an X announcement. I think what were you able to claim, Wardaddy? Did you take a look?
I haven't gone on blast in months, if not a year at this point. So I think I'll skip that one. I think the only thing I want to touch on that is like, there was one that was somebody was buying 12K Bitcoin from an independent Bitcoin holder. God damn, like that's so much money, dude. That's crazy. Yeah. So
let me just try and find the details on it, because so I can share a bit more, so we can talk on it for a sec. Ledge, before I find those details, is there anything else you wanted to talk about from the roundup outside of the main headlines? Sorry, this is going to look weird for people who are watching this show. I can't describe how terrible my setup is today.
Looking up in the sky. On the Franklin Templeton, the Strategy Treasury Playbook, I find it quite entertaining that basically they went on to describe, let me make this a bit bigger here, the different mechanisms of how this can look like, how a company can acquire BTC, whatever cryptocurrency, to set up their treasury. And they were like, yes, there's an all at the market program, private investment in public equities, preferred equity, convertible notes, secured, unsecured notes. And then there's others, which is SPACs, obviously special purpose acquisition companies, and reverse mergers. I like that they put Tron with their reverse merger in the others category. But it does speak a lot to how rapid this change was, how everyone started to want to buy BTC in different ways in the company. And also what we've been speaking about the last couple of weeks, I feel how these stocks started to actually trade like meme coins on the grounds and on the basis of that. And I'm wondering, how long can this continue? Like, how long will we pump stocks 200 to 500, 600% a day when we find out that they announce BTC or crypto treasury strategy or hype treasury strategy? And then B, how does that impact the other thing that everyone, I feel like, is waiting for, which is the next crypto native IPO after Circle, where there's Gemini, one of the other companies, how that will play out. Yeah. Is Tron faster than Gemini?
I'm not sure if it's sooner or not, but
I have an anecdotal story about that. So I have a friend of mine who trades in a very, very, very small firm. And I think total portfolios maybe just entering 9 figures. And basically he reached out to me yesterday and he was like, because I told him about like X stocks and stuff like that. And I was like, I think that that's really interesting. Now, I don't think the product is built very well. Like, I don't think that that's going to go anywhere. And I think it's just the very, very early innings of X stocks and stocks on chain. And obviously on Hyperliquid, that's going to be something that is offered and all of that kind of stuff. So I think the Oracle problem, like the 24/5 and all that kind of stuff, like, I think in order for price discovery to happen on chain, like there needs to be a better system in place, but that's not the point.
Just to explain the 24/5 thing for people who might be trying to follow along.
Yeah, so like obviously you can trade during the week, you can't trade on the weekends. Obviously, traditional stock market has like a set time for the market to be open outside of market operating hours. You can trade at nighttime, but like the company that is underwriting these stocks, obviously like the OpenAI thing, they're going to have to go buy that supply the next morning or sell that supply the next morning. So the product just doesn't necessarily work. And so for price discovery to happen on chain, I think it's going to get really, there's going to have to be an increase here in terms of product composability, product usage, but early innings, right? So I was talking to my buddy about that. And basically he told me, for the first time in his life, he's seeing crypto volatility in traditional assets. And he's like, I don't know how to cope with this. And he was like, these treasury stocks are freaking pumping left and right. And I sent him the hype treasury stocks, and I was like, oh, look at this. Like, because he has a little bit of hype, but he's like, he doesn't want to do things on chain. And so then I was like, look, if you want hype exposure, like this, I'm not doing it, but like somebody else could if you're interested in this. And he is like, he goes on this tangent about how the crypto volatility is leaking into the traditional asset space. And it's pretty interesting, right? Like, I don't know how long this can go on for, but it really is similar to what we were talking about with like stable coins and banks and all of that kind of stuff. Like, there's this merger that's happening, that the old guard is getting rattled by the new age kids that are coming in, the crypto volatility and all of that kind of stuff. And they don't know how to accurately price stable coins. Obviously, we see Circle pump to 300 now, it's retracing and all this kind of stuff. Like, they don't know how to, I don't want to say think on their feet, but like these are different games that we're playing, and their game is different to our game, right? So I think it's just very interesting to see how this is all playing out. But I thought it was interesting to hear from my buddy that's like, yo, we can't cope with the volatility.
That is super interesting. And arguably, maybe that's the type of thing that sends Circle so fast and so quick to 300, where actually, if you like, I think at least there were a lot of people who knew more about the Circle business that were like, this is getting overvalued now, guys. Like, maybe it's one of those scenarios where usually TradFi and the traditional institutions look at us and say like, look, what are you doing? This stuff's stupid, it's overvalued. And it was one of the first times, I think it was the other way around, where like we knew it was overvalued, but I don't know, I guess there was still a bid out there for it from traditional markets because they wanted crypto exposure. So it's like a very interesting crossing of paths there, right?
We've always talked about dumping our bags on the suits, so I'm here for it. I'm here for it.
Yeah, that'd be good. One follow-up question, Wardaddy, since you're with us, and it's something we've been like ruminating on a lot. We had Mando on the show like a couple of weeks ago, talking about the Bitcoin treasury company question. Like, how concerned are you about it? Obviously, it's spilled over now, not only to ETH, people are doing it for Sol, people are doing it for hype. Do you think ultimately it's like a healthy, is this the healthy holder base? Like, as a Hyperliquid Maxi, are you happy that there are these entities that come in and buy tons, maybe sometimes using raising mechanisms to do that, not necessarily doing it with like a safe amount of capital that's just on their balance sheet? How are you thinking that through? Because I'm trying to get some various opinions on this.
Yeah, like I think it's inevitable, right? Like, I think these kind of things are just going to continue to happen. In terms of like, even like we were just talking about launch pads, right? Like, do we need another launch pad? Like, no, we don't. But like, people are going to build shit that people want to use, I guess, if they can spur any movement or anything like that. So I think that these treasury companies, or whatever you want to call them, are trying to take advantage of the momentum of whatever new asset it is, especially with like the hype related stuff. I think that that's cool. Like, hype is a little bit different because traditional, I don't want to say this, traditional folks can't get access because hype isn't on centralized exchanges. So that's a little bit different than Bitcoin or Solana or ETH. But yeah, I don't know. I think for the time being, it's what we have, and people are going to use it. And obviously, we're seeing these things pump. So they have found some type of product market fit. Are they going to be here in 2 years? I have no idea. So
yeah, I think that's the cautious, smart conclusion at the moment, where it's like, we think it's kind of like everything that's pumping. It's like, we think it's going to be fine, at least for a little bit longer. And then we're going to have to decide in 3 to 6 months time, we'll reassess.
I was like, give 6 months and then we'll revisit. But I feel like that's like you said, it's kind of how everybody's thinking about it right now. I hope that we don't have any of these blow up. But if we do, like, I think we got some more time. I think we got time. That's we'll see.
Well, fortunately, we'll be here monitoring it as the year goes on. So the more ridiculous it gets, we'll be here to talk about it as it gets more ridiculous. Moving on to a couple other things, Wardaddy, you just wanted to know some of those additional bits of information on this group. I just thought I'd just share the specifics. of the news. So this was yesterday reported out of China in Shenzhen. Addentax Group, which is Nasdaq listed, today announced it's entered into a non-binding term sheet with a substantial and independent Bitcoin holder to acquire up to 12,000 Bitcoin, significantly increasing the potential acquisition size from the originally discussed 8,000 as disclosed in the company's May 15th press release. Based on prevailing market prices, the proposed acquisition represents an aggregate market value of approximately $1.3 billion. If completed, the transaction would be settled through the issuance of newly issued shares of the company's common stock. As you said, this is a huge buy. I guess it's probably quite convenient for all parties to do this kind of stuff, in effect, like OTC, right? It's kind of not having to do this buying up off the market. Any reflections there, Wardaddy and then Ledge, on this type of buying? I've seen a lot of people saying that, oh, you know, all these treasury companies are buying. Why is the price not going up? Maybe it's because a lot of the original holders have seen the Bitcoin vision change and really shift. This is not what they envisioned, and they're kind of selling out. Do you subscribe to that? What are your thoughts?
I think that this is kind of normal, right? Whenever you see some type of like huge price increase, like think about it. Let's just go back to like old OG Bitcoin holders. Like say these guys had 12,000 Bitcoin on hand and they've been sitting here for years. Like how the hell do I exit this position? Like obviously they want upside, but then you have slippage and all this kind of stuff. Obviously Bitcoin, it's a little bit different, but I think a lot of these OTC deals are changing of the guard a little bit, like new holders coming in, people taking advantage of like the treasury stuff. Like obviously to use like a reference, like OSF and Mando, right? When they had OSF and Mando, when they had all the apes, and then Blur liquidity came in and they're like, right here, this is my opportunity to kind of offload all of this supply. I don't know, maybe it's something like that. Also, yeah, I saw that this morning. That's brutal. But I don't know. I don't really have much to take on that. I would like to hear what Legendary says, though.
I think this is the way to look at it from the perspective that you have people who can now exit with bigger size and don't, for whatever reasons, could be different reasons, don't have to go to your typical centralized exchange. And you might also have these cases where someone is close to a specific company. You might have the cases where someone, for whatever reasons, can't access that exchange, or a specific exchange the country would have trouble with proof of funds, and might be easier to go through a company until this is going to get more regulated. So I do think it is sort of a liquidity unlock. What I'm wondering is, I know that the centralized exchange basically, an order book basically does that, but if there's going to be some sort of OTC matching desk for Bitcoin whales and companies who want to build the Bitcoin treasury strategy, if someone will think that there's just enough meat there to build a platform out of that, or if it's just not worth to think in that direction, or if an existing OTC desk will just add that to the offering, which I think is probably the most likely thing now that I'm brainstorming live about it.
Yeah, I think someone will add it on as a potential kind of side business, but maybe, yeah, let's see. In terms of the argument itself, I'm kind of open to that, because I can't think of, given the other aspects of the news that we've been talking about recently, like rate cuts coming, Powell on his way out, geopolitical relative stability versus what it was not long ago, tariff stability versus what it was not long ago, Elon Trump stability versus what it was not long ago. Like, it feels like everything's kind of ramping up to the rate cutting cycle that people have been expecting. And so, yeah, it has been a bit confusing to me as to why we've just continued to be in this range without any kind of maybe breakout. But, you've got to be patient with this stuff, I guess. That's the thinking. Okay, what did we want to do? I think, CoreWriter. So before we get into the main headlines today, we've got two more things to do. One, we're going to do our Polkadot segment in a second with our partners. But before that, Wardaddy yesterday. We had this conversation with GigaETH talking about how fast they are, how composable they are. And the objective that we always want to achieve when we have people on to chat is like, look, we want to present that bull case and hear that out. The one thing I was thinking though at the time is when we're talking about Hyperliquid is that I think it was maybe more composable than maybe is understood. And CoreWriter is a part of that. So do you want to just have a moment here to just explain what why you think CoreWriter makes Hyperliquid more composable? Why is that interesting to you guys as a builder?
Yeah, so basically I'll just give a brief kind of intro into what CoreWriter is. To this point, you have HyperEVM and you have HyperCore. HyperCore is the main perp dex that everybody uses. So if somebody says I'm using Hyperliquid to execute XYZ trade, it's going to happen on HyperCore. And then you have HyperEVM, which is like a parallel chain that together they are one chain, but they have two separate segments, right? So you have HyperCore, which is the DEX. Then you have HyperEVM, which is like all of the smart contract integrated platforms. So if you're using Hyperlend, Felix, Liminal, Kinetic, any of these things, you're going to be using that on HyperEVM. So that is the smart contract platform. And then HyperCore is the ultra specific specialized DEX, right? So what CoreWriter does back 3 months ago, 2.5 months ago, we had the read precompiles go live, which allowed teams that were operating on the smart contract platform, a la HyperEVM, read like oracles from the HyperCore. And that was like, that mainly worked for, say, like money markets like Felix or Hyperlend or people like that, right? But you couldn't execute anything. So you couldn't do any action to HyperCore. So like this is a big thing for Kinetic because of the fact that we're liquid staking, right? So we're taking in stake and we have to distribute that stake to said validators. So that's why CoreWriter is so important for us, is because in order for us to do our job, we need to have access to write or to push actions on HyperCore. So that's the main reason why CoreWriter is very important for us and for other builders as well. I think what this unlocks is a lot of these different DeFi yield opportunities, yield aggregation, those kind of things are going to be really interesting. At the core of that is obviously Kinetic and liquid staking. So we've talked about this before, but liquid staking. So right now, Hyperliquid has like 2.29, I think 2.29% APR for native staking. To unstake on Hyperliquid, it takes 7 days. So on Solana, it takes like 2.5 days. On ETH, it takes even longer. Hyperliquid's like kind of in that middle area, but you don't want to wait 7 days to unstake. So that's where liquid staking comes in, and you can use your liquidity like freely, but still have access to the 2.29% staking APR. And then on top of that, you have DeFi yield, whatever that you want to build on top of that. So think instead of using vanilla hype for XYZ strategy, you're now getting 2.29% APR on top of that strategy. And it's just more composable that way. So really exciting stuff for us to get going. Obviously, we've been waiting for a long time, but that's why CoreWriter is important. And I think that there's going to be a really big unlock. Like if we were to look at like the DeFi Llama TVL on Hyperliquid right now, like, dude, that's going to boom. Ready for sale hype, I expect to go down. I can go into this a little bit deeper, but like ready for sale hype is going to go down. TVL is going to go up. Staked hype is going to go up, I assume. And then hype on HyperEVM is also going to go up. So there's a really cool dashboard. It's called Hype Burn. I can drop it here. I have it in one of these things. There we go. Hypeburn.fun. I'll put it in our chat. There we go.
We've got it.
Yeah, perfect. So that top section right there is going to be like the light blue one at the top right is going to be basically vanilla hype. Like that is AKA ready for sale hype. So they could go to HyperCore and just sell it for USDC right now. The next little white square right there is hype on HyperEVM. So that's 7.4% of the circulating supply of HyperEVM or hype on HyperEVM right now. I expect that to go up. The next one down is hype that is currently natively staked. So obviously on the back end of liquid staking is natively staked hype, right? So that I expect to go up. And then the next one down there is the assistance fund, which is the AF, which all 97% of Hyperliquid fees go back to the buyback mechanism. So as of right now, you have Hyperliquid owning like 7.6% of circulating supply of hype. So pretty cool stuff. But I think CoreWriter shakes this to its core. Like I think we're gonna have some really interesting products get pushed. We're gonna have like there's just so much that we can unravel in the Hyperliquid space that people aren't really paying attention to at this point, just because it's not live. But the CoreWriter announcement said that they're going to be pushing it at the next network upgrade, which is probably on Saturday, historically speaking. So pretty cool stuff. We'll hopefully have it live next week.
Sounds super interesting, man. And those charts which we were showing on screen, just remember we're streaming this live as well on video. We're live on X video on YouTube as well. I think it's super helpful to kind of watch those statistics change. If you want to have a proper and full assessment of how Hyperliquid's doing, like it's very, very helpful to watch TVL grow, watch how much the EVM is being used. If that's going to be something which is going to add an X amount of value being attributed to it, you need to know, like, okay, is this actually being used as much as people are saying? What's the potential for it to be used versus what's going on core? So super helpful, man. Thanks for that breakdown. And you know, we're going to be on with us again next week, so we can go off in different directions on Hyperliquid a bit more routinely now. So right, we're going to get into the headlines in a sec, as usual. Got 15 minutes left of the show. Let's get to our partner segment with Polkadot today. They've been having some killer updates on the hydration side, all kinds of yield available. Legendary, what do we need to know here?
Yeah, absolutely. Polkadot's main DeFi protocol Hydration is doing impressive numbers. TVL is up to 238 mil from 50 mil when Hydration caught our attention back in April. 30-day trading volume currently sits at 300 mil. That's a double up from when we first covered the protocol. And last week, we did report on Gigadot farming and the tokenized Bitcoin pool. Just a quick update on that before we dive into the main topic for the day. There's still space in the pool for around another 100 BTC, and the current yield sits at 26%. Additionally, Hydration just launched a farm for ETH holders called GigaETH, and you can either supply ETH or wrapped staked ETH and currently earn a 33% yield, which is paid in Gigadot. TVL sits at 4.7 mil, and there's room for 700 more ETH. That might sound like a lot, but yesterday one whale deposited 370 ETH in one single clip, so that can be filled up pretty quickly. If this farm sounds intriguing and you're wondering how to bridge your ETH to Polkadot, you can also use Hydration to do a cross-chain transfer and bridge your funds. And thank you to Polkadot for sponsoring this segment, and stay tuned for more Polkadot explorations.
Interesting. Yeah, I mean, the yield available here is much higher than in other places. Those yields are getting juiced quite routinely, so we will keep an eye on that. Funky, our Polkadot correspondent, hand raised as usual. How you doing, my man? What do you want to come in with here? We cannot hear you, Funk.
We cannot hear you.
Yeah. Okay, we're gonna have to move on, Funky. You're gonna have to mute, I think. And we're gonna have to try again. Sorry, man. This new audio setup is almost there. We're almost there with it. But we'll circle back to you in a bit, hopefully, as we get into the headlines. If you want to come back, maybe just on the phone, that might be the best way to do it for now. Right, first headline, Legendary. Today, we wanted to talk about, what are we going into first? We're going into BlackRock. This is pretty actually mind-blowing news, right? Like, what do we need to know here with the ETF revenue?
Yeah, it's a pretty simple headline, but again, it's pretty groundbreaking, as you said. And it is that the iShares Bitcoin Trust ETF IBIT has generated more revenue than BlackRock's iShare Core S&P 500 ETF, with an estimated $187.2 million in annual fees. You said it at the top of the show. We've seen this sustained, IBIT is here. It's the first column. I'm showing this on screen. Seen this sustained inflow in the Bitcoin ETFs, and a lot of that is obviously being carried by BlackRock. Just pick a date like the 25th of June, 550 million total in inflows. there of 340 in the IBIT ETF specifically. So definitely in this picture continues if you scroll down. The market leader here, if you look at the total flows, you'll see 52 bill flowing into IBIT, and the next biggest one, FBTC, is a 12 bill. So definitely is dominating it in terms of the competition. But the seriously impressive things, as you said, is that it's surpassing the iShares Core S&P 500 ETF. So just to repeat those numbers again, 187.2 mil in annual fees for the BTC ETF and 187.1 mil for the S&P 500 ETF. If you look at the size in terms of the TVL, so to speak, the assets under management, that is 75 bill for BTC and 624 bill for the S&P 500. So the S&P 500 is 9 times larger, but revenue-wise, outperformed by the Bitcoin ETF.
I mean, it makes sense why Larry Fink likes Bitcoin then, right?
It's a cash cow. It's a cash cow for the business. It's beautiful.
Like, that's just astonishing. I think that's always worth like bearing in mind, right? Like the question I ask myself in all circumstances now is like, what are the incentives? What are the incentives at all points in time? And I do think now one of the best reasons to get bullish, or it has been since the ETFs opened, right, is this potential. Like you have this new asset class that is, I've actually heard two things now. You know how before Bitcoin was always compared to maybe the market cap of gold. So it's like, okay, Bitcoin is 2 trillion, gold is 20. There's this 10x delta between the two. Maybe that's going to compress, maybe it's going to flip, who knows? But the point is that's too big a gap between these two gold-like property. You've got gold itself, you've got digital gold. That gap is too big. The thing that I've heard recently from some pretty sophisticated fund managers is the idea of like global wealth. Like global wealth, I'm just going to make up a number, but actually I shouldn't make up the number. Maybe I should. I don't know. Global wealth like 400 trillion. Is that right? I don't know. Anyway, the point was they were using the global wealth number as their kind of benchmark, and then saying, okay, well, Bitcoin's only two of that. Whether so, it's real estate wrapped up, it's all this other stuff wrapped up, it's stocks, it's real estate, it's all these other things wrapped up together. And when you look at that, that's an even bigger delta, right? Because the proportion which comprises Bitcoin is so small. And so you can see why, as you're coming out with this brand new ETF product, you're just thinking the sky's the limit here. Like how far we can push this, I don't know exactly. But when you look at that proportion, when people need to allocate a proportion to it, the opportunity was obviously incredibly good. And which means, like, look, whose side do you want to be on when you're looking at people's incentives? Just get in line with BlackRock. Like, just get in line with them, right? I think that was the way that I've kind of been thinking about it for some time. Wardaddy, curious on your thoughts.
Dude, I think I would like to hear your guys' thought on like what the end game is for like why we're here, right? Like, why did you get started in crypto, right? Like, I know for me personally, it was 2017. I had just torn my ACL. I was playing professional soccer, torn my ACL, and I was like bedridden for months. And then that's when I found Bitcoin, right? And like the idea of Bitcoin at its like heart was interesting to me. And I was like, fuck, okay. Like, so the end game is Bitcoin, right? And so then even with all this other stuff, you have Hyperliquid, you have all this kind of stuff. Like the end game is to stack sats. Like that's it. So like outside of that, when you see all of this stuff going on, when you see these headlines, it's always about Bitcoin. So I don't know. I think for anybody that's listening, like for me personally, after fucking 8 years in this game, the end game is Bitcoin. And like all of the other stuff is like cool, it's interesting, it's novel, but the end game is to stack Bitcoin. And I think that that's something that when we're talking about all of this stuff, like I think you have to look through it with a lens of like, okay, is this worth putting my Bitcoin into this to make more Bitcoin? And I think that back in the day, like crypto Twitter was like that, right? Like it was just like the goal was more Bitcoin, and these things were like little stupid things that you were doing on the side. And then you try to make more money, and you try to make more money, and you try to make more money, and then you go back into Bitcoin. That was always how crypto Twitter talked about it. And now it's lost the plot. It's like freaking fart coins this and it's undervalued because hot air rises and all this kind of stuff. And I'm like, dude, that's so fucking stupid. And like, if you find a greater fool, then that's great. Like, send it. But like, the end goal is to get into Bitcoin. And I think we're going to continue to see this trend upwards, right? Like, whether you're using global wealth or you're comparing it to gold or whatever the case, we know that Bitcoin is going to continue to go up at this point because there's so many different products being built around it. So many products, like the Fannie Mae thing where people can buy their houses with using cryptocurrency as collateral. Like, what? That's so crazy. It's so crazy. I don't know. Yeah, that's my take.
I saw this really interesting point being made by someone else, so I can't take credit for it. But I think one of the, you know how there's this, at the beginning of the Trump presidency, there was this argument between Main Street and Wall Street. Like, look, Wall Street's done what great for ages, Main Street's struggling. And there was an idea that Main Street, look, this analogy is not going to work perfectly, but let me just articulate it and see what you think. So like the idea that Main Street was struggling, which is true, and therefore this presidency was going to try and shift it a little bit and prioritize the normal average working person because they've been screwed over in the last decade or two. I think clearly that's like, it's gone out the window. They're going to just make sure the stock market goes up and they're going to inflate away the value of the currency. But there is this opportunity, and again, the average working person probably doesn't hold these assets. But the way that I think about it is that every generation has their own opportunity. And so once upon a time, people will look back and say like, oh, what, you could have bought that house for 50 grand. Like, oh, your generation is so lucky because your generation got to do that. Everything's so unfair for us. We can't afford that thing that we need. And now we're outpriced. But I think this generation's opportunity is Bitcoin. And in some way, I don't know if this is like a administrative thought, but you could maybe not equalize perfectly because maybe a lot of, but I think institutional wealth and maybe more traditional people are sidelined on Bitcoin, right? The majority of people who have money are sidelined on Bitcoin. And the people who've held it are people like us, people who might have discovered it in their 20s or younger or maybe slightly older and have, you know, who is certainly, I don't know what your guys' backgrounds are perfectly, but you know, not in that bracket of wealth. So at least in some way, it's an opportunity for people to bridge to bridge some of the wealth inequality, which has started to manifest over the last few years, which I think people are agreeing that this is a serious issue when there's so much damn debt. At least for the proportion of people who hold this stuff, it's going to bridge the gap. I don't know if enough people own it for it to make a meaningful difference. I think student loan debt is insane. And, you know, for the people who are not holding assets, it's going to be horrific still. But, you know, maybe this is a way for people to bridge the gap in some way. Does that make any sense?
Definitely. I agree. I think that this is something that this is why we got into crypto, right? Like we see the writing on the wall, and the people that don't want to take the time to learn about this stuff, they're not going to learn about it. It is what it is. Like you can't, what's the saying? You can lead a horse to water, but you can't make it drink, right? Like it is what it is. Like these people are going to miss the boat, and that's just going to be how it is. But at the end of the day, I think Bitcoin, sorry, we have, it's like a lawnmower going by, but yeah, I'm going to shut up there.
Ledge, what's your take?
I think multiple things on that. I very much agree with the thinking that each generation has an opportunity. It definitely was real estate for the boomers. I think to Wardaddy's point, why people are chasing fart coins and so many other things is just an expression of the fact of how expensive Bitcoin has gotten. So I recently made a post that I think like for most people having, you know, as part of the portfolio goal, achieving 10 BTC would be a very nice goal to have. But also realistically speaking, having 10 BTC means that you are already a millionaire and you're already like doing pretty well, especially given on the assumption that not all of your available capital is going to be, at least not for everyone, is going to be tied up in those 10 BTC. Even 1 BTC is a lot of money. It's more than 100K. So a couple BTC is what used to be a house earlier on. And that happened very fast. It's a move that happened within a couple years. And the housing, that took way longer. Real estate prices took way longer to inflate. And I think what's happening is that people like look left and right and see like, oh, the 2015, 2012 maybe old guard, they have accumulated BTC so cheap and they've become millionaires within a couple of years if they manage to hold on to that and still have access to the wallets. And they want the same thing because they're like, I can either stack sats and yes, probably outperform my S&P 500 significantly, or I can try to find the next big thing that will do a 100x, that will do a 1000x, and might allow me to skip 5-figure hell, skip 6-figure hell, and straight enter 7-figure hell, where I can actually accumulate a couple of BTC if that becomes the end goal to do. So I think both those things are happening at the same time.
Okay. Interesting take. Want to bring in a good friend of the show and producer and host of Fantasy Hour, Carpenter. Welcome to the stage, my man. What's your take here?
Hey, morning, B, morning, Ledge, morning, Wardaddy. I just wanted to touch on that. The fact that I talk a lot with my wife and like my close friends and family. I've been trying to onboard them, right, especially into Bitcoin. And like especially like my brother, who's like a few years younger than me, right, but still in like that millennial generation. I feel like the millennials and like the Gen Alpha or whatever, especially will probably be the same way. They think, like my brother Josh mostly always says, he's like, why would I buy Bitcoin when, and like, so his take is when I can buy, Fartcoin or whatever, that is, if it hits the, and they don't think in market cap, right? They think in price per coin. And, I try to explain to them, if like, it's really hard for you, say, even like in Ethereum or a Solana to hit $100,000 per coin, the way based on a market cap, right? But a lot of them don't think that way, especially like the normies. So they are more looking at, like kind of what Legendary said, is Bitcoin is so much more expensive right now that they're wanting to jump in on whether it's Solana or kind of pitch them hype too, but still they go back to like the price per coin bias.
Yeah, I think it's a real thing, man. I think that's one of those inevitable things, and it's one of the things that, look, even as a younger, more immature investor, that's something I would have thought as well. And it's like you learn these frameworks by putting the time in over years. Like I remember, just like one quick anecdote before we hit the next couple of headlines before we close. Like I used to be a terrible investor in my 20s. Everything I touched, I would just lose money over and over again. And I think like it's the same when people come into this space and like, okay, you buy something at the top and you just lose money. But it's like you have to build the resiliency. You have to like participate. You have to read from people who are smarter than you, and like you build up that muscle memory of investing and having the resilience over time. And these frameworks of how to think about things, like this gold comparison with Bitcoin is super helpful. The global wealth comparison is super helpful when you think about Bitcoin. So I think those two frameworks is things which you have to, as Wardaddy said, like you gotta put the time in, you gotta read about it, you gotta like really, really work to kind of come to those conclusions. And unfortunately, it's one of those things you can't transport your conviction or your conclusion to other people. Rarely. That's what I found anyway. So I definitely empathize with some of the conclusions you're coming to there. But look, we're kind of running over on time today, guys. We've got two other headlines to touch on. Let's just knock them out the park quickly. Ledge, do you want to touch on your one first, just to give us the core details, just because it's interesting? I don't think it needs a significant discussion. Then I'll just touch on the OpenAI one.
Yeah, it's basically continuing the banking discussion that we had, and it is to do with Peter Thiel joining a series of tech billionaires backing a new lender, Erebor, to rival, as you said, Silicon Valley Bank. Continues this naming tradition of Lord of the Rings, named after the Dragon's Mountain in Lord of the Rings, that is. And that group is being led by Paul Malucky, co-founder of the military contractor Andrew, which we also have touched a couple times upon on the show.
They're doing a stablecoin. He's doing a stablecoin as well.
Exactly, yeah. And the goal is to launch a US bank to fill exactly this gap that was left by Silicon Valley Bank, servicing startups, including cryptocurrency businesses. That's basically, given that we are a bit short on time, the gist of the news here.
Okay. Well, my quick take on that is an excellent idea in an environment where the regulation is going to facilitate that definite gap in the market for it. Normal banks, I don't know if it's just me speaking in our country here, but they just don't work with crypto. Like even if regulations are saying it's okay, like they still don't work They still don't work. It's still not It's still not as frictionless as you'd like it to be. So if you compare good regulations with a bank that's being built newly to facilitate business, then I think that will be really, really good. Final headline of the day. Maybe I'll come to Wardaddy for a take on it, because you mentioned X stock earlier. Is the headline that OpenAI does not endorse Robinhood's tokenizing of its private shares. We had a lot of fanfare yesterday about Robinhood's offering of private stock that is usually very hard to access. But yesterday, OpenAI slammed the trading platform Robinhood for offering tokenized versions of its private company shares. They said these OpenAI tokens are not OpenAI equity. We did not partner with Robinhood. We're not involved in this and do not endorse it. So pretty resounding no vote of no confidence as such in it. However, the founder of Robinhood responded to say this. They said, at our recent crypto event, we announced a limited stock token giveaway on OpenAI and SpaceX to eligible European customers. While it is true that they are not technically equity, the tokens effectively give retail investors exposure to these private assets. So certainly not disputing anything that OpenAI said, but just making the point that, look, we know that all of those things are true. Nevertheless, it still gives you exposure. Our giveaway plants a seed for something much bigger, which they are planning. So I guess it's a dual question here for you, Wardaddy, as we close out. One, are you interested in this kind of private stock side? I think it's one that could behave quite meme-like whenever it comes out. I mean, they're literally telling you do not have equity. So it's kind of like a private meme token of literally two of the biggest companies in the world, which the real people are saying, no, this is not real. So I feel like it has some meme-like qualities. And then secondarily, you mentioned X stocks earlier. You interested in stocks on chain?
Yes, I guess the way that I think about all of this stuff is like perps are like synthetic exposure, right? Like perps, like Bitcoin perps. Like if you're long Bitcoin, do you own Bitcoin? No, you don't, but you own like synthetic like exposure to Bitcoin, right? So that's just how I kind of think about all of this stock stuff. But just in generally, like that's how I think about it. And I think that obviously it's not like for like, but I think that that's gonna be something, because we talked about X stocks earlier. Just I think it's gonna be a headache that they have to get over. Like there's gonna be a hurdle, technically speaking, if we want to see price discovery of stocks on chain, right? Like if stocks only trade in XYZ time frame, and then you have a pre-market and a post-market, outside of those hours, there's no speculation. There's like news comes in, but like outside of those hours, there's no room to speculate. So I think that that's where crypto does a really, really good job. Like we are built for that. We're 24/7 markets. Like I think that that's really, really exciting. Once we can figure out the oracle, once we can figure out like price discovery of equities on chain, that when that happens, I'll be excited. But I think that this is a good step in the right direction. But in terms of it being like it trading like a meme, I think it'll trade like a meme just because there's no liquidity. Like I think but like most of these Solana shitters don't have liquidity, and that's why they get pumped to millions and millions. So like that, it is what it is. But that's my take.
Okay. Fascinating stuff. Well, it's definitely something we're going to come back to because we're definitely trending in that direction. Anyway, private stocks are going to be within the same conversation as crypto now, because these assets are going to be alongside crypto assets, whether it's in Robinhood, whether it's on Hyperliquid, whether it's on GTE or wherever. Like these things are going to be housed next to each other, which means they are in competition with each other in a way that in a way that's not been as frictionless before. So we'll circle back to that as usual. That was a great conversation, guys. Enjoyed today's show. Hope you guys in the audience did as well. Just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X video, YouTube, and you can catch us on Apple and Spotify podcast. To one piece of administrative information, we will not be live tomorrow. It is the 4th of July, so we will take that day off. We hope all of you have a nice day off or a restful day, even if you're not off. But enjoy the 4th of July. We will be back with you on Monday. Thanks to my co-host Legendary and Wardaddy for being back with us. See you then. See you on the other side. Have a good long weekend. Take care, guys.
See you guys. Bye-bye. Thank you.